An unstoppable rush into gold and silver lies ahead, and in the aftermath, my guest today, Ed Steer, says prices will reach levels that most people would find unimaginable. When it comes to making a prediction, his response is pick a number for both metals, as he believes that decades of suppression has left precious metals markets completely disconnected from reality. And when that reality kicks in and the big commercial banks shorting the metals are forced to cover, he believes an event the late great Ted Butler once coined the bonfire of the silver shorts will take place. We're diving into that right away. Ed Steer, great to have you back on Commodity Culture. Last time you were on the show was in March when silver was at around $83, and we've largely chopped sideways since then, currently sitting at around $74 an ounce. Is this a healthy consolidation in your view, and what are the signs that you're watching that could indicate where the price is headed next?
Well, that's a really loaded question because this correction, quote unquote correction that we've had was totally artificial and brought upon by the eight large commercial traders who saw that the prices of silver and gold were going parabolic in a short covering rally that would have been gone into the history books for the next 1,000 years. But rather than have that happen, they came in at the end of January and hammered the prices lower. So this quote unquote healthy correction is just another one of these wash, rinse, and spin cycles that we've seen where the prices run up and the boys come in and just hammer the prices lower. So we're in the middle of this wash, rinse, and spin cycle right now, and what they're doing is they're slicing the price salamis to the downside, trying to cover as many short positions as they can by getting the managed money traders, other reportables, non-commercial traders, and the small traders to puke up their long positions and go short. Now, we've seen this movie before countless times over the years, and this is just an extended version, if you want to put it that way, of what we've seen before. So they just keep pounding away, covering as many short positions as possible. And when that process is complete, and it will be complete at some point, then the stage will be set for the next rally. And to go a little deeper into this, starting in June of last year and running up until the Commitment of Traders report last Friday, the eight large traders in silver have covered 43,000 short contracts, okay? And they have their lowest short position on record, and the big eight in gold have covered 88,000 short contracts since the 20th of January. So this wash, rinse, and spin cycle has been really, really good for the boys, and one of the reasons why the prices ran up so much. So I'm watching very carefully. The thing I'm really watching carefully is just how low can they get the prices before the non-commercial traders just aren't prepared to sell any more longs or go short anymore. And we're close to the bottom right now, as far as I'm concerned.
I want to pick your brain on the premium in Shanghai versus the West, because you noted in a recent edition of Ed Steer's Gold and Silver Digest that the premium was recently at around 10% in Shanghai. What is causing that? We've heard all sorts of things online, from its VAT tax, but I actually dove deeper into this and found that that wasn't the case. This was on top of the tax. Why does that gap exist in your view, and do you expect it to potentially accelerate and the premium to get higher in Shanghai?
Okay, well, you're absolutely correct. The VAT tax has zero to do with the silver price. That's a value-added tax on to the retail consumer when they purchase the stuff at the bullion stores, wherever it is. It's the same here in Canada. We have a value-added tax, which doesn't apply to silver and gold, but on retail sales, it's applied at the point of sale. So let's get that out of the way first. And as far as the premium is concerned, well, first of all, and most importantly, of course, the demand for silver in China is far higher than it is in North America. And the same goes for India. If I just digress for a second, they've stated recently, 6 months ago, that, they're not going to be using the LBMA price or the COMEX price. They're going to set their own price of silver. And that's because for the reason that the demand for silver in India and China, the two largest, they're at least a third of the population of the planet. The demand for precious metals in those countries is extremely high. And so there's a premium when you buy this stuff in China or in New Delhi. And one thing about the silver premium, like you said and correctly said, is 10% right now. It's been as high as 16, 17, 18% in the last 6 months or so. But one thing I can say is it's not always been this high. If you go back into parts of mid 2025, late 2025, it was actually negative. Like it was selling for a discount for like a week or so, and then it shot back up into double digits again. And for large portions of 2018 to 2024, it's actually in single digit premium. So, it hasn't always been that way. I've seen the chart. I had it up on my screen here a minute ago, and I've lost it now. But it's been all over the map. But starting in 2026, the end of 2025, it's shot into double digits, and it hasn't gone down. And you would think that with the silver shortage that they have, and that it exists in the supply-demand deficit, that is probably going to stay double digits. And will it go higher? Maybe. Will it go lower? Possibly. It's just impossible to tell. But there's no question about it. It's a demand. It's demand in China and in India and places like that that causes the premiums to be higher there than they are here.
I've spoken to a few people. Alistair McLeod comes to mind, Francis Hunt, who believes that increasingly the price of physical silver is starting to be set by China, and that the Chinese market is becoming more of a true reflection of the value of physical silver. Do you think we're entering a world where the price is set in the Chinese market and not in the West? And if so, how would that affect paper manipulation of the silver markets?
Well, I can tell you one thing: when the day comes that the prices of all commodities are set in China, which is one of the goals of the Chinese government, is that they want to wrestle the price of, the price of commodities from the West over to the East. Right now, without exception, the price is set in the COMEX futures market in New York. That is where the price is set. The price that you quoted me when we came on air today, and the price you're looking at your screen right now, is not a Shanghai price. It's not an LBMA price. It is a COMEX price. That is a fact, and that hasn't changed, and it isn't going to change until China wrests control. And the moment that they get control of the price, then you're going to see the manipulation end, because there's no paper contracts traded in China. They're set on physical supply, and there's no futures and options market associated with silver and gold. And then we'll see what the true prices really are. But for the moment, and until that changes, the price is set on the COMEX. But someday, like I said, China is going to take control of commodity prices worldwide, which is where they should be set anyway.
Commodity Culture is hosting our first live boot camp Saturday, June 27th at 1 p.m. Eastern Time. We're going to take an in-depth look inside my portfolio, A to Z, what I own, why I own it, what I'm buying, what I'm selling, and the framework through which I'm viewing the commodities sector right now as geopolitical instability, global conflict, rampant inflation, and central bank money printing continues to ramp up. Natural resources will be the winner in the years ahead. I'm going to explain why, share the greatest insights I've absorbed from all the guests on this program, and so much more. So join me for the Commodity Crisis Playbook Bootcamp, Saturday, June 27th at 1 p.m. Eastern Time. Sign up using the link in the description below. Before we hit record today, you were referencing an article by the late, great Ted Butler called Bonfire, the Silver Shorts, and you referenced it to the recent events in January of this year where silver ran to $120. And you touched on it a little bit in your answer to the first question, but I'd love you to dive a little bit deeper on your thoughts there on how, if the bullion banks hadn't come in and stopped the price from rising, that we would be at a spectacular silver price right now.
Oh, yeah, absolutely. And thank you for bringing it up again. Like I said, the silver started to rise, last year sometime, March, April, May, whenever it is, it started to edge higher. And everybody's looking and saying, my goodness sakes alive, this is really great. It got through 27, then 28, then 30, and everybody was getting ecstatic about it. One of the reasons, or the main reason, that silver and gold were rising at that time is because the commercial traders who are mega short the gold and silver market, and all precious metals actually, were beginning to quietly cover their short positions. And of course, as they covered the short positions, that caused the price to rise. And I could see it in the Commitment of Traders report every week that the big 8 short positions in both silver and gold were starting to decline. And they continued to decline and decline as they covered more and more shorts. The price rose higher and higher and higher. And starting about the 1st of December, the speculators started piling in. That's when things started going parabolic. But even with that even the prices going parabolic, the big 8 commercial traders continued to cover their short positions right up to and including the Commitment of Traders report that we saw on last Friday. Right now, the short positions in the big 8 in silver and gold are the lowest on record. It is unbelievable to see where they are today. And like you said, and I'll just go back to January, if there was so much speculation going on and so much short covering going on by, like Ted Butler's Bonfire, the silver shorts, that the price was going parabolic and it was going up like $5-10 a day. That if the powers that be, which means the big 8 shorts, hadn't stepped in there and killed the rallies right when they had, we would have seen, if silver had been allowed to trade another 48 hours longer than what it was, we would have seen silver at $200, $300, $400, $500 an ounce, and it would have been one of these panic short coverings where the shorts would have burned in hell and the longs would have made their spectacular profits. And anybody who's listening to this podcast knows perfectly well that we would have had a 3-digit silver price if it had been allowed to continue. As a matter of fact, I have Keith Dumeyer's 3-digit silver price T-shirt on right now as I'm talking to you, and that's where we would be right now. It would be some spectacular number, and sooner or later that's where it's going to end up, because the short position of the 8 large traders has been shrunk down to almost nothing. But there's still a huge short position. I think the open interest in silver yesterday was like 101,000 contracts, which means there's 101,000 long contracts and 101,000 short contracts. And those shorts have to be covered one way or another. And the only way they can do that is to go into the market and buy a long contract. And that will start another short covering rally at some point. And with the 8 largest traders holding their lowest short positions ever, the chances are pretty good that they're not going to step in on the short side the next time the prices start to rally. So, things are looking really good for the future. Just a matter of how long it's going to take them to cover as many short positions as possible. And like I said, we're in this wash, rinse, and spin cycle now, which is getting very, very close to being completed. The only caveat to that is the fact that the other thing I'm watching very carefully and started watching recently the last couple of weeks is that we've had a rising 200-day moving average in gold. And as the big 8 shorts have engineered the price lower to cover more and more shorts, we're within about $50 of gold's 200-day moving average. And now that I see, the price, the way the trend is, it wouldn't surprise me at all if the powers of the boys, the big 8 shorts, are going to blow gold through its 200-day moving average in their attempts to cover as many more shorts. And then we'll get even more long liquidation by the non-commercial traders as they decide, they're just not going to hold on to many more longs, and they're going to go short, to precious metals. So if they can accomplish that, then we're going to be at the mother of all lows. And I can tell you right now, even though I'm all in the precious metals, if they can get gold below 200-day moving average, I'm going to be stepping up to the plate and investing even more, because, this price management scheme, Danny's been going on since 1975. And, the demand for gold worldwide is just awesome. And sooner or later, this price management scheme is going to come to an end. And when it comes to an end, it's going to be at a time when the big 8 commercial shorts are going to be minimum short, and that time is very fast approaching.
Great breakdown. I'd love to dive into some price targets that some previous guests on the show have discussed for both gold and silver. First, I'd like to talk about Michael Oliver. He came on the show not too long ago. He said he believes silver's headed somewhere between $300 and $500 this year. Now, he follows momentum-based structural analysis. So he's a strictly technical guy, and these are what the charts are telling him. And he believes that not only will silver go to those levels this year, but that we will then be entering a new price reality for the metal where that 300 around will act as a floor and will essentially be in a new price reality. I wonder what your thoughts are there and if you have similar views as well.
Well, sure. I mean, we're going to have a three-digit silver price, whether it be 300 or 500. It doesn't matter, and whether you use technical analysis like he does, or the facts that I'm looking at, we both end up at the same price target. So this is not a big surprise. But as Ted Butler pointed out over the last 15, 20 years, he says, look, you tell me what the big 8 shorts are going to do in silver and gold, and I can tell you where the silver price and gold price are going to do. If they decide to put their hands in their pockets and not go short on the next rally, $300-500 will be a reality within a week, okay? And pick a number on gold, okay? So one way or another, depending on what the big 8 shorts do, we're going to see a three-digit silver price is both required and necessary because of this structural deficit. So, 300 to 500 is, a nice price. You're waiting for it. I'm waiting for it. And so is everybody in this broadcast listening, waiting for it too, And when the big 8 shorts decide, that's when it's going to happen.
And you kind of answered the question about gold already, but I'd just love to get your thoughts because I had Edward Dowd on the show and he said he believes gold will be at $10,000 by 2030. Do you think that's too conservative of a target?
Yes, and it's going to get to 10,000 long before 2030. That's my opinion, because when they let these things go and they decide that I wouldn't call it repricing so much as, nobody knows what the true free market prices of silver and gold are. They have never been allowed to trade freely in all of recorded history, let alone our own lifetimes. So nobody knows what their prices are. Look at the world central banks. They're gobbling up gold at a 1,000-ton a year rate for the last 4 or 5 years. This isn't showing any signs of slowing down. So the demand is huge, and it's unrelenting, and paper currencies are heading into the toilet across the board, and the rush from paper assets into hard assets it's on in earnest now, and there's just no way to stop it. And the only way to slow it down any is to let the price run up so it becomes prohibitively expensive. And I have no trouble with $10,000 gold, but I think it'll be here long before 2030.
Well, you mentioned central bank demand. It's been reported recently that gold has officially overtaken U.S. Treasuries as the largest reserve asset globally. I've also heard this was reported earlier. Supposedly this data is as of the end of 2025. But nonetheless, do you think we're witnessing our monetary paradigm shift in action? And assuming this trend continues, could this spark the next leg up in this gold bull market?
Well, absolutely. I mean, this shift has been going on for a long time. Well, I remember back in 2000, I was paying $5 an ounce for silver, and $280 an ounce gold, and I was buying silver because I thought $280 for gold. I said, who wants to buy it at that price? And every time I go to bed, I think about, Lord, just give me that day back just once. Okay, so the rush is on. It is now unstoppable. Okay, everybody knows, even at the Federal Reserve and the European central banks and the Japanese Bank of Japan, whoever, everybody knows that paper is dead. Okay, and the rush into hard assets has begun in earnest. It's unstoppable, and the trend will continue. Like I said, it's unstoppable. What did Thomas Jefferson say about it? Paper is poverty. It is but the ghost of money, not money itself. Well, that's playing out in real time right in front of us now as this experiment fiat currency comes to crashes and burns, and it's happening right in front of us. So will this start the next leg up in the bull market? Would like to think so, but like I said, and like Ted Butler said for a while, when the big 8 traders decide, that's when it's going to happen.
There was a lot of talk of auditing Fort Knox earlier in Trump's presidency. He then made a cryptic remark in some interview that it might be stolen, and since then the trail has grown very cold. You have Ron Paul pounding the pulpit trying to get something going, but nonetheless, it's been a lost cause, or so it seems. However, just the other day, Trump revived the idea on Truth Social and posted about doing a full audit. Do you think this is a real possibility? And if there was an audit, do you think the officially stated gold reserves would actually be there?
Well, everybody's dream is to have Fort Knox and West Point audited to know if what's really there and if it's all there or not. But to tell you the truth, in all honesty, as much as we would like it to happen, I would like it to happen, you would like to happen, is in reality the powers that be just aren't going to allow it. And there's two reasons for that, I would think. First of all, if I had to bet my proverbial $10 on it, if all the gold is there, I would say that it's not. And secondly, even more important, as I and other people have pointed out over the years, how much of that is actual gold that's sitting there is actually encumbered, has got paper written against it that's out on a swap or a lease or whatever. Nobody knows how much of that is encumbered in any way. And the other thing I'll point out is that a large portion of it is not in good delivery form. It's coin melt from the gold confiscation of Roosevelt back in 1933. So, when you take a look at Fort Knox, on the whole, what you see there is not good delivery. Like if you go into, say, China or England or London or wherever, all the stuff that they hold in their inventories is good delivery form. But the United States is gold reserves, are very tainted as far as I'm concerned, and an audit, I won't live to see it, nor will anybody else who's listening to this podcast right now.
Another narrative that's been circulating, of course, is the demise of the US dollar, that it will lose its reserve currency status, and that the petrodollar is under threat. More recently, China selling oil for renminbi. Some are speculating that that's a part of the reason that the US actually went to war with Iran. Of course, we hear the dollar could be set up to enter hyperinflation at some point. You cover the dollar index in your letter and the strength of the US dollar. Could you help us separate signal from noise here and give us your current view on the health or lack thereof of the USD?
Well, we could have a whole podcast on that, but just simply put, is that the United States U.S. dollar is the world's reserve currency, and it's not going to change anytime soon. Although it is slowly heading for the exit, because as you pointed out, the other currencies are fighting to get their market share, especially the Chinese renminbi or the yuan, whichever you prefer to call it. And the China's made no bones and very public about it, is that their plan or goal at some point is to have the yuan or the renminbi as the reserve currency of the world. They've got a long way to go to do that, but that's in the works, and it's part of this attempt by the BRICS nation, of which China is the leading member, to get out from under the hegemony of the United States, whether it be political, financial, monetary, or militarily. They just say, we're tired of Pax Americana and the American empire, and we just want to get the hell as far away from it as possible. So they're doing everything in trade and currencies and payment systems, the whole nine yards, just to get out from underneath this. And the war in Ukraine and the war in Iran are all part and parcel of the Anglo-American Western, hegemony trying to derail this shift of economic and political monetary power that's shifting from the West to the East. The West has been in dominance for the last 500 years, so whether it be the Portuguese or the Spanish or the German or the Dutch or the Italian, and then the British, and now the Americans. They've dictated the terms to the East, and everybody else, the South, South and Central America and the Far East and Africa, for the last 500 years. And finally, these BRICS nations, of which a lot of power now, China, Russia, India, 20 years ago you wouldn't be saying this, but now they've risen from the ashes, and they said, hey, we're tired of this, and we're going to go our own ways, and this is what we're going to do. And I'll tell you what, after 500 years of Western domination, and now that the internet's come along and I've learned as much as I have, I'll tell you what, the West time and the sun is setting. And this is what the fight between the East and the West is now, whether it be in the currency markets or in the financial markets or on the battlefields in Ukraine and in Iran. It's a fight of a declining West against a rising East, and the dollar index. The dollar is just going to be one of the casualties when this whole thing comes to an end.
What do you think about the closure of the Strait of Hormuz and the impact it's had so far on both energy markets and the global economy? And how bad do you think things could get? Because obviously there's a lot of jawboning coming out of the US administration, but it seems like the war is on. There was a tentative ceasefire. Now we have seen both attacks from the US on Iran. Iran has then responded by attacking Kuwait and I believe Bahrain as well, some military bases. I believe they hit an airport, the Kuwait International Airport as well. At least that's what's circulating on X at the moment. How far away do you think we are from potentially getting this thing wrapped up? And assuming it drags on, the Strait of Hormuz remains closed. How bad do you think things could get for the global economy?
Well, first of all, anything I say would like about this would be wild ass speculation, so I want to say that right up front. But one thing is for
Sure.
sure. One thing is for sure. Okay, is that we're slow walking into World War III, which is what we were talking about. I answered the previous question about the East versus the West, and that's what's happening right now. As far as the Straits of Hormuz, the Iranians are only letting through whatever ships they're allowing to through. Anything that has going to U.S. or Europe isn't being allowed to go anywhere. As long as you pay your fee, you'll be let go. So, this is affecting the oil markets. Obviously, I mean, I see oil's up again today, and the talk out there is that there are enough reserves in the world, in Europe and Africa and Southeast Asia to last till the end of June or part of July, and then we're already see the price increases. So this is having an effect on the world economy, and not just just on Iran and the Middle East. So I don't see this ending anytime soon. I expect this war to go on and on and on. So if you think it's going to be done by the end of June, end of July, by this fall, or by the winter, I think people are sadly mistaken. This war is not meant to be won; it's meant to be perpetual, as Adolf Huxley once said at one time.
Yeah, I completely agree. If I was to venture a guess, I would say we're looking at years, not months, in terms of the length of this conflict. I want to talk about government bond markets because they appear to be under some strain as we're seeing rising yields across the sovereign debt world. Is a potential crisis in that market on the horizon? And as investors and stackers in the precious metals space, why should we be paying attention to what bonds are doing?
Funny you should bring up the bond market because I write about it in my column. I think it was it June or October of 2022 or 2023. The 10-year got up to 4.92% as at the high, and since then they've beaten it down. They got it under 4 briefly, and now it's back up to 4.50, and the yield on the 10-year is being protected at 4.50. They don't want it rising any higher than that because look, I mean, U.S. has got what $40 trillion worth of debt, and that applies to how much debt does every other country have. So as interest rates rise, the cost to maintain the debt, the interest rate on the deficit, more than more than the U.S. Military budget, something like that. So they're desperate to keep interest rates down, and I see that the 10-year made it up to 4.9497 today. So you can see that they're protecting that level strenuously. But it's like everything else, Danny. The dollar index is being managed. The stock markets are being managed. Precious metals are being managed. The bond market yields are being managed. And as Chris Powell said, 20 years ago, he said, there are no markets anymore, only interventions. There are interventions, everything. Everything you see out there is a total hallucination, including the prices of silver and gold, which should be fantastically higher. The dollar index should have crashed and burned a long time ago, but they're keeping it propped up. And the interest rates on the 10-year, based on the debts being held around the world, not just in the U.S., should be well north of 5, 6, 7%. I remember back in 1980, and I lived through that because I remember it well when interest rates hit 10, 19, 18, 15, 16, 17, 18, 19%. I mean, that was absolutely amazing. And of course, such an interest rate environment cannot be allowed to exist again, because that would absolutely destroy the financial system overnight. So, they have to keep these rates artificially low, regardless of what the inflation rate is or what else is going on in the world economically or monetarily.
Now, there's going to be people listening to this who've heard you talking about the manipulation of gold and silver and how long it's been going on for manipulation in the bond markets, across the commodities markets, through futures contracts, etc. And they're going to say, well, what's the point? The whole game is rigged. How is this ever going to end? Because we're now also seeing absolutely blatant insider trading happening at the highest levels of politics in the United States, with Trump literally sending out a Truth Social post moving markets one way or the other, and people taking massive positions who would have to be insiders, so somebody he's directing or who is close to him. Now, of course, we know all about the U.S. politicians becoming spectacularly wealthy off of insider trading throughout their careers. Nobody's doing anything about it. So I think a lot of the average person's mentality in that is, what's the point? This is a rigged game, and the manipulation's never going to end. I can already read here in my mind and see the comments that are going to be left down below whenever this conversation comes up. So what would be your answer to that? How is this game ever going to end?
Okay, let's look at this from the 30,000-foot altitude. First of all, empires. I don't care whether the Roman Empire or what empire it is that has ruled the world over the last 2,000 or 3,000 years. When they reach their zenith, they become corrupted at the highest levels. And if you want to take a look at the specific one, let's take the Roman Empire, where was it? I can't remember what Caesar, he nominated his horse for the Senate. Okay, now we've got Mr. Trump building golden idols to himself in Florida. I mean, when you see that, I mean, you should scare the shit out of anybody. Okay, so this is what happens when empires reach their peak, when the corruption is the rot in the U.S. government and the financial system in the West. And I'm not just talking about the U.S., I'm talking about everywhere. Okay, the Epstein deep state class that has now taken over the West, is corrupt to the core. And that's always the sign of the end of empire. And so it's just, we don't know what's going to happen. It's going to be Hemingway slowly at first and suddenly, but, we're slow sleepwalking our way to the end of, the West as we know it and the financial system as we know it. And as far as those people say, well, it's rigged against me and I don't want to invest it, I'll tell you what, I heard the same thing when I was buying silver for $7 an ounce and gold for $250 and $350. And I stopped buying gold at $800 an ounce. So that's it. I remember buying a 1 ounce, $20 gold piece in New Orleans at the gold show down there at Blanchard's Gold Show back in, I don't know when that was. And I put it on my credit card. I said, oh my God, I hope I'm doing the right thing. And I took it back home and I stuck it in the drawer. And I look at it now and said, God, if I'd known then what I know now. So if you, Lord, please let me have that day back. And I say that about a lot of things. And everybody looks at their portfolio and said, if I'd bought this when it was back at 70 cents and now it's $14, so, we're just in a 9-inning ball game. We're top of the second inning at the most. So, there's still lots of room for this to run, but the only thing we don't know is what the big 8 shorts are going to do and how long a time period this is going to go over. But, a year ago, if we'd been talking about this, silver would have been at $27 and gold would have been at $2,000. We said, my goodness sakes alive, is it ever going to get any higher? Hey, I've heard this all before over the last 25 years, and I'm sure it's going to go on for a long time yet. But like I said, this has only just got started. There's lots of room for this to run.
Yeah, some great points there, because when silver was in the $20-$30 range, people were scoffing all the time in the comments at people calling for $50 silver, let alone 100, 120. So I think people need to get their recency bias out of the way. I want to end on gold and silver miners because they continue to look undervalued pretty much across the board. I found it interesting. The big gold producers such as Agnico Eagle and Newmont saw their stocks drop on the back of record earnings reports. And across the gold and silver mining space, the sentiment seems to be very negative right now. Do you think investors believe the gold bull market is in the later stages and these earnings will no longer be sustainable moving forward? Or are there other reasons the miners haven't been holding their own in this precious metals bull market?
Well, you've opened a real Pandora's box here, and I don't want to get into it on this show, okay? But if you look back at the ratio of the stock SIL or SIL. It's a silver index, SILJ or SL whatever, versus the silver price. Okay, and I have that chart going back 10 years. And you look at it, and there was a discontinuous event. It was more or less correlated up until the middle of September. And all of a sudden, the correlation fell out of bed. And it was obvious to me, okay? And if you look at the 2025 stats year on year, the gold shares outperformed the gold itself by 2.14x, okay? Whereas the silver stocks only outperformed silver by 1.17x. So there was something hinky going on. And it's my opinion that they've been managing this precious metal stocks as well, and that this has been going on for 6 or 8 months, and maybe even longer, but it's been obvious for a while that I believe that they're managing the share prices as well, although in the last week or so they may have backed off, but they got their nose stuck in everything. But as far as the mining shares, I don't care, you pick one. Pick any of the majors, and you're talking about Agnico Eagle, which is a wonderful company, and Newmont. Okay, you can pick First Majestic Silver, any of the majors, any of the juniors, and that are good, solid producing companies, and they're selling for only a fraction of what they should be selling for. I think right now they're selling for about 1 point something times earnings, or 1 point something times the price of silver, and they should be selling for far more than that. So, as far as I'm concerned, the precious metal prices are a real bargain at the moment. And how long they're going to stay that way, I don't know. But when we have the next big rally in the precious metals, no question about it, they're going to catch a big bid.
Tell us about Ed Steer's Gold and Silver Digest.
Okay, well, I've been writing this column now since 2007. Then I went on my own. I was with Casey Research at the time. And when they got taken over by Stansberry, I went on my own in 2015. That's 11 years ago. My goodness, where's the time going? And I write a daily column on the precious metals, 5 days a week, which is about 260 columns a year. And just Google my name, Ed Steer, Gold and Silver, and my website will pop up. And there's a tab on there for a sample column, and you can click on that, and it'll show you the sort of information I publish, and if you're interested, it's US $100 a year.
Well, I'll put a link in the description below. You're practically giving this thing away. I received your letter, and it is so packed with so much data and information. So I think it's very much worth that incredibly low price. Ed, I'm also going to put a link below to the Ted Butler article, Bonfire, the Silver Shorts, so people can dive into that as well. Ed, always love having you on the show. Thank you so much.
Well, I'll tell you what, just as what I said was as important as what I had to say, silver analyst Ted Butler, may he soul rest in peace, was the number one silver and precious metal analyst on planet Earth. And what he says in that article is extremely important. And if you want to know what the boys did at the end of January, is that they cut off that bonfire of the silver shorts. So the real bonfire, when we see the 3-digit silver prices that everybody's talking about, including myself, when that happens, then we're going to see the bonfire, the silver shorts go supernova in a matter of days, weeks, if not days.
Thank you for joining us. As a reminder, the first Commodity Culture live webinar is coming up June 27th, 1 p.m. Eastern Time, the Commodity Crisis Playbook. I'm going to be walking you through my personal portfolio, A to Z, what I own, why I own it, what I've been buying, what I've been selling, and my overall framework for viewing the commodities sector. I think you'll find a ton of value. You can sign up at join.jesseday.ca. The link is in the description below, and I hope to see you inside. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.